Good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. Woohoo! The weekend's in sight. All right, we've got a fairly neutral open here on the morning. By that I mean the market taking over more or less where it left off yesterday. So no opening gaps to deal with the overnight. Relatively quiet yesterday, turning out to be a very strong rally session. For those of you new in the trading room this morning, let me give you just a really quick overview of what you're looking at here. This is the diversified trading system, of course. We've got the Hawk Scalper here in the top left, the Falcon Swing Trader top right, Eagle Trend Trader bottom left, and then we've got the Raptor here on the bottom right. All right, we're getting a little bit of a trend change signal going on here. The Hawk not producing a first micro-macro cross yet. However, the Raptor giving us a soft edge sell. It's still very early. Yes, we're only a couple seconds into the session, and I'm sorry I forgot to turn on my screen display, my screen share. Sorry. Let's try that again. Alright, so here's the Raptor, and we've got that soft edge sell. Looks like we're coming down now. Going to intersect a trend line. And we'll see what happens there. Again, for those new in the room here, we've got the Hawk Scalper in the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and then the Raptor here on the bottom right. Yeah, Stephen says, a senior moment. Oh, Stephen, if that weren't so true. Oh my gosh. All right, just kind of waiting here till we get a little bit more information. We're still relatively neutral. See here on the Hawk, we're printing these clusters of yellow bars suggesting the market might be sideways. This is a macro pullback signal. If you wanted to give it a go, I would recommend placing your stop relatively high. The market does owe us a retest of the low here. Here we go, we got our break even. Come on. Oh, you stinkers. That was probably because I was a little bit late on the entry. My entry was a couple ticks off versus right there. I would have hit my profit objective. Now, funny thing is, you could consider this a first micro-macro cross, and let me explain why. The initial first micro-macro cross developed way down here, and you can see we took a little bit of heat on the trade, and we're still kind of working that one, but why is this one also a first micro-macro cross? Well, you have to remember what the first micro-macro cross is showing you, namely that you've got a market that is out of sync and then a market that comes back into sync. That's what makes a first micro-macro cross signal. And that's also what makes the signal so powerful. So here we had a market that was all out of sync. Bars were out of sync, trend lines were out of sync, filter was out of sync. This was the first signal that printed where everything was in sync. Perfect example of why you don't want to strangle your trades. And by strangling your trade, I mean you place your stop just above the high. Right? If your risk amount is going to be the same, regardless of where you place your stop, you don't necessarily want to keep your stop ultra tight, and this is why. The market brings you in, heads to your profit target, and then promptly stops you out, only to go to your profit target without you. Right? How many times has that happened? If you're like me, too many to count. So why don't you leave yourself a reasonable stop? Well, where would a reasonable stop be? Well, up here is definitely a reasonable stop. Okay, you're only in for a single, but isn't the objective here to make money, not lose money? And if it means you make $50 instead of $350, or instead $50 instead of losing $350, isn't that a good trade? I think so. And then, of course, as your account grows, you'll be able to risk more and more. Or you could, if you like, if you're only trading a single, this is what I'll do a lot of times. If I'm only in for a single contract, sometimes I'll try to run it out, especially early, because we've seen a lot of early momentum in the market, right? There's lots of times the market gets busy early. And so why not try to run it out? And if it goes, it goes. If it doesn't, well, you take a break-even stop out. But even there, your $50 in the bank is better than a break-even stop out. So this is a first micro-macro cross. This is also a first micro-macro cross because everything went out of sync, everything came back into sync, even though the micro line and macro lines never crossed again. So we have, bar colors out of sync, trend lines out of sync, filter goes out of sync, everything comes back into sync. That's what makes that a first micro-macro cross and a high probability signal. And fortunately, also a profitable signal. Hooray! About that same time, we saw here a trend change signal on the Raptor, or a cloud crossover. So the clouds crossing over, the market retreating into the clouds, the Raptor producing a signal, and down we go. We may get a secondary cloud crossover here. We will see in a moment. We'll see here how serious they are about heading lower today. Crude oil, kind of in this sideways mode, well, slightly downward to sideways. Definitely downward, but the market opened 3 bars ago or 2 bars ago and hasn't moved. So we have a teeny tiny little sideways range here. Taking a long time to print some bars. Soybeans putting in a nice rally. I should have got on this one a little earlier, right out of the open. You're watching soybeans, beautiful little red bar buy signal here. Now, yesterday we were watching soybeans and it was obvious the market was in this really tied up sideways range. And what do I always say when we're in a sideways range? Let the market break out, let it retest, let it prove to you that it can stay out, and then take that signal. This is almost textbook how that worked out. So the market breaks outside of the range, comes back, produces a high probability signal, and so far, so good. Go Beans! All right, we've got something resembling a rule of three here. On the Eagle. It's still very early. We might as well wait for the ATR. I've waited this long. Can I risk it up there? Yes, I can. All right. Let me explain this rule of three. It is a rule of three, and it's not a rule of three. It's, this is a better rule of three right here. A rule of three on the Eagle is a counter trend signal. And Nick, I'm going to get to your question in just a second. A rule of three is a counter trend signal on the Eagle. Therefore, before you can have a counter trend signal, you have to have a trend. Here we have an obvious trend, right? The market's obviously moving higher. The rule of three occurs when the market starts to produce counter trend signals below the band. So we're breaking the band and we're producing sell signals. Typically, the market falls apart or changes trend after that third signal. A rule of three must always, always, always be preceded by a retest of the high. In this case, the high. A retest of the trend and a failure. Now, sometimes this retest will be big. Sometimes it will be a little bit more shallow, as it is in this instance. But you need to see the market attempt to try to recover the trend and then fall apart. That's what confirms that it's a rule of three. Now, a rule of three is only a loose guideline. Very often you'll get three signals. Sometimes, as in this instance, you'll get four. Sometimes you'll only get two. That's why that retest of the extreme is so important. Without that, you have no rule of three. But you can see the market came down, hit your profit target, actually gave you another trend change signal in there as well. Compare that rule of three with what we're looking at right now. Okay, we've got 1, 2, 3 counter trend signals, but this trend is hardly the same strength-wise as this trend, right? So this is, even though it's a rule of three, is not as nice a signal. It's not as well defined. So here we have signal 1, here we have signal 2, here we have signal 3. We have had a retest of the high. I'm considering that to be the retest. And now we're looking for prices to continue lower. Now, you could also put your stop above here, the logic being if the sellers, they took control of the market right here, if they fail at this price level, then the market is likely to continue higher, right? So you could take an earlier stop out here. I'm going to try to hold my stop above the high and try not to be quite as quick with my stops as I was yesterday. That was one of the notes I made in my trading journal. I got a little bit too cute with my stops, which is a bad habit of mine. Okay, so Nick is asking, how can you tell where you enter trades on your charts? Well, yeah, you can see, I'm assuming you can see the entry here, the entry price. So it would be this first bar that violates the entry price. That one. Is it quad witching today, Tony? I know it's triple witching. Quad witching and triple witching are terms that traders use to describe today, a day where we have all kinds of things expiring. We have futures contracts expiring, we have options expiring, we have stock options expiring, and that's called triple witching. And then there's also quad witching, where you got one more thing expiring. Makes for sometimes some interesting trading. All right, we're still struggling for some direction here. Now, the way I do things, if I'm already short a position, I won't get too excited about buy signals. I'll try to give the market a chance one way or the other. All right, come on down. Now, you can see now why I recommended not placing your stop right here, because the market rallied up, would have tagged you out, and then headed back down. And here we are testing the support yet again. It's very tempting to bring my stops in above here, and I may well do that if the market reverses again. It looks like it's going to try to head higher. Right now, I'm really trying to give the sellers an opportunity here to get this market going their direction. Excuse me, but I'm not liking the continual rejection of going lower. We've got, bounce after bounce after bounce. That's not good. Come on, let's get a break. Somebody get in there, take 48.0. What do we need first? We need 48.03. Yep. So we hit 48.03 quarter. Somebody there we go. 48.03. There we go. Now we're starting to engage some of those exit orders. All right. There we go. Getting a little bit of a breakdown now. Come on. Nick is asking if you weren't already short the NASDAQ, where would be another good target entry? Well, let's take a look here. We had a first micro macro cross signal here on the hawk. We also had a trend change signal, a textbook trend change signal here on the Falcon and the Raptor. Nice little cloud crossover again and a short. I guess if you're looking for another place to get in, we would be looking for a macro pullback or perhaps a 4-arrow consolidation here on the hawk. I don't know if they're going to give us that. They're plotting lower, not exactly screaming lower. Come on, keep pressing. So we're currently at the lows of the morning, as you can see here on the Raptor. Oh, we got some buying coming into the market. See how the Geiger counter was pulling and sticking there to the buy side? There we go. That's what I want to see. I want to see the dial move here to the short side and hold, but it's not happening. Okay, I'm going to get a lot more aggressive with my stops here in a moment, if in fact they fail to head lower off this bar. In fact, I think I'm going to force the trade to break even. I'm just going to give the market this bar. I was thinking about going to parabolics. But it's put up or shut up time, as they say, for the bears. If they made a valiant effort pushing the market lower from here. And then they stalled. So if the buyers reverse it from here, you can see we're still tracking kind of sideways. I'll be just as happy to take that break-even tap. Good question. Elmer is asking about the trade manager here. He says you have quantity set at 1 and you're set your risk mode at 2%. Which one is being used? The trade manager, if you toggle this, if you click on risk percent, you'll go to manual mode. There's two modes here. When risk percent is showing, you're always using this value here. So your trade will always default to a percentage value. If you go to manual mode, the quantity will default to this value here. So that's how you can control that. So generally speaking, I usually only have 1 or 2, because if I go into manual mode, it's I usually only want to go in with a single because I don't like the way the market is setting up. Otherwise, I'll leave it in risk percent mode. The Trailblazer, of course, a little bit different, where you preset your quantity and your profit targets right out of the gate, and then you'll get that amount every time, either when you hit your buy or sell market buttons, or when you right click and enter your trade, you'll always get those values. So we're currently set for 2 contracts total. One with a 10 tick target, let's make that 20, and the other as an open contract, as a runner. All right, so we're seeing the market a little hemming and hawing here, not really sure what to do with themselves. I'm not really sure what to do with them either. We've got a 4-arrow consolidation just printed here on the eagle, or pardon me, eagle, on the hawk, coincided with the macro pullback signal. 1, 2, 3, 4 signals. We're interested in taking that 4th signal, and the 4-arrow consolidation is always most desirable when it has this flag type shape to it. So this is very much like a bear flag. It's also a macro pullback, so we've got an overlap in signals. Probably do something like that to it, and boom, hit the profit target. Nice little scalp. Hit the profit target, now we're just kind of wandering. Which the market will do sometimes. There we go. Getting a little bit of a breakdown in prices. All right, so the market appears to be in a bit of a downtrend at the moment. We'll look for a good selling opportunity. Soybean bulls seem to have their market well in hand. Great rally. So right off of the primary support, nice little bounce there. So we've moved 1, 2, 3, 4, 5, almost 6 zones, 5.5 zones. That's substantial. All right, we might be in for a little bit of a wait. If you can't draw a very neat and tidy trend line. That from the pre-market open. If you take the market open, we draw it something like this. Pretty flat. That's a very flat trend line. I don't think that's actually going to come into play, that one. Not for a long time anyway. Here's something you can do when you're stuck for a trend line. Oops. That still doesn't look right, does it? No, it doesn't. we should see a little bit of a reaction here, or not. Still nothing going on in crude oil. All right, so we've slipped down now to the primary support. Could see a little bit of a reaction here, but this market very bearish at the moment. If we get a reaction here, so once you have a market that you can see has established a trend, what's going to happen from here is every time the market rallies higher, we're probably going to see some selling as the market tries to go higher. So sellers will look at this and they'll say, oh, the market's in a downtrend today, so they'll try to sell the best price they can. That's why things like the red bar buy and green bar sell work so well on the Eagle. At this point, the market's obviously in an uptrend. Prices drift down, we get a red bar buy signal. Buyers see that as an attractive opportunity to buy, and then the market continues a little higher still. This is perhaps a slightly better example. The market takes off and all the buyers are thinking, oh, the market's in an uptrend now. So it comes down, they buy it. It breaks out, they buy it. It comes down, they buy it. So they'll look for almost any excuse to get into the market. So we have a similar thing going on now, where the market seems to be in a downtrend. Most traders will look at this and they'll be fairly certain the market is trending lower today. So they'll look for any opportunity to sell at a better price. If the market gets back here to the hard edge, say somewhere around 4,800, 4,802, we'll probably see a sell signal develop. And that will be the sellers trying to get on board with the market heading lower. Now, if we see a sell signal and a failure, then all bets are off, and we may actually see prices head higher. See, look at how quickly the hawk came up here, actually bolted up here and produced yellow bars. That's not good. That's not what I want to see. Yellow bars precede trend changes. Yellow bars precede sideways ranges. Yellow bar bad. Well, we're just going to wait them out a little bit here. The Falcon working on a trend change signal, possible trend change signal. You could throw your hat in the ring here. If the signal completes, currently we only have the warning dot. Nice thing is we are getting a bounce off the primary support. That's good. The bad news is it is counter trend, right? If anything, if the market does have a trend today, it is a trend lower. But there's room here for a little bit of a rally. Like I said, sellers will be looking for opportunities to buy, or pardon me, short at better prices. Well, before we get better prices, we need to see the market rally up a little bit, don't we? Not quite a soft edge buy on the Raptor yet, but very similar. The soft edge buy, we need to see the retest and the failure here. So we've come down a couple of bars. If we come down a third bar, that would be more convincing. If we come down a third bar and then we produce a buy signal, I think we can expect a little bit of a uptick from the Raptor as well. In fact, I'll set my stops in anticipation of that. All right, so we've got a, here comes our Falcon signal. So I'm anticipating the hash mark is going to print right here near the high. It hasn't printed yet. We only have the warning dot. Mr. Buckaloo is asking, Eric, do you put any stock in the typical 3-wave correction and 5-wave trends? Yeah, there's value in it. I know Mike Filigera likes following Elliott waves very closely. The problem I have with Elliott waves is they're more difficult to do real time. Much easier to see in hindsight. You know, in hindsight, you can say, oh yeah, you know, here's an ABC, however you choose to plot it out, or here's a, you know, 5 waves up, and it's all easier after the fact, most times. Sometimes it's very clear how it plays out. But that's my only beef with Elliott waves. The principle is sound in that you'll have the market expanding one way and contracting to a smaller degree the other way. Yeah, I agree with Salicia's comment here about Elliott waves. He says it's rather subjective and everybody has their own interpretation of it. I suppose if it suits your eye, there's nothing wrong with it. And like I always say, if it helps you make a trading decision, then by all means, go with it. Mr. Buckaloo says it drives me nuts. Yeah, I know. Honestly, that's one thing that I really appreciate about the DTS system. It comes down to identifying the high probability signals and then just choosing whether or not you're going to take the trade and how much you're going to risk on it. Those are really the only trading decisions you have any control over. All right, so in the meantime, Paul was asking, Eric, would you consider the eagle signal being printed right now? Now, I know that signal has since disappeared, but I think, Paul, we were looking at some red dots printing right here, and I wasn't getting too excited about it because it was so far against the ATR, and because the other tools suggested, we're going to see a little bit of a pullback. I was not all that keen on shorting, so the hawk, very, very conflicted, all these yellow bars. The falcon producing a trend change signal. The raptor also kind of playing with that trend change. So thank goodness those warning dots disappeared and we didn't even have to worry about it. Now the raptor ran away from me while we were looking at that, but here was the soft edge buy signal, so you could currently be long the raptor. Unfortunately, that signal printing a little bit later than I would have liked. I would have liked to have seen it print right about there. But that's where we got our falcon signal, so hooray for us. Hooray! It's still a toss-up. I thought the sellers were going to be stronger today, but the buyers have made a very strong rally. Let's take a look here on Mr. Raptor. We still can't draw a decent trend line across anything. Only reason I'm shooting trend lines is, all right, maybe we'll go with that. We'll just ignore this little breakout. Is because other traders see trend lines. Other traders will look at this market and they will see the trend lines and they will sell up here. They will, buy off of trend line support. Well, I'm not going to be able to draw an accurate one here, but you get the point. Right? The market hits the bottom end of the trading range, buyers show up. Hits the top end of the trading range, sellers show up. So if you're able to draw a decent trend line on the chart, it's worth knowing what other traders are seeing. Now, don't panic if you're no good at drawing trend lines. It takes a little bit of practice, but it's hardly a skill that can't be learned. And you're just looking for the most obvious stuff because, believe me, that's what most traders see. They see the obvious. Alright, getting a macro pullback signal here. Come on, get down into yellow bars, you stinker. We've got a green bar sell here on the Eagle. This is a high probability signal. I would use this current bar as the signal bar because if it prints on the low, it's going to flip the ATR over. The problem I have with this signal is covering the trade. I would not cover it here. I'd have to cover it at least up here because I don't think the market is done retracing. I can see it making another run at the highs, maybe taking out the highs a little bit before giving us another push lower. All right, well, here we go. Could have also used the second push entry on this. When you're hesitant about taking a signal, which for many of us is most of the time, you can allow the signal to print and there will be a reaction. You see how we're reacting to the signal now? You could place your order now below this low. And what that does is it forces the market to give you some renewed momentum before bringing you in. Most cases, you're only looking at sacrificing a couple of ticks anyhow. But if you look at what happens almost after every signal bar, you get that reaction. Here, there was a reaction. You can tell by this little itty-bitty tail. Actually, this one reacted very, very late. It wasn't really a... Oh, no, I guess that was... yeah, I guess that was a green bar sell. Kind of struggled a little bit. Paul's asking, what's your ATR setting on the Eagle? It's just the default. And let me show you. I've got a trade going there, so I'm not going to mess around with it, but let me show you how to do that. So you go to your Eagle chart, and you pull here to your indicators, and then you roll down here to all these tools called IW, and you find the one marked IW TM ATR trail. It's actually what your trade manager uses to plot your stops. Mike Filigaro was the fellow who put me onto this, and the only reason I leave it on the chart is because it helps me make a trading decision. So if you double click on that, it's going to go into your indicator assortment, and I just use the default values of 14 and 2. Click apply, and voila, you now have a squiggly red and blue line on your chart. Okay, our trade making a little bit of headway. Come on, get down there. Get to my break even, you stinkers. Yeah, Tony says, I hope Jim's doing well with his option trades. He's probably doing okay because I think he wrote options. So unless they actually start trading in the money, he'll be all right. He may have ditched his. All right, here we go again. Let's take that trade to break even. No, it's not going to let me. It's a little bit too late. All right, sellers, you got to dig in. There we go. They're going to tag me here in a second. There we go. And I may well have been a little quick on that, but I don't feel like losing anything today. This higher bar, this higher swing, is making me a little bit uneasy because it may turn out to be a retest of the low. Now watch this one continue lower just like the other one did. Doggone it. I knew I should have went and got a cup of coffee. When you make a trading decision like that, don't beat yourself up for it. I was trading with a fellow. I was coaching him. He gave me he hired me to mentor him in his trading, and he was doing very well. And we were ready to start trading live. He done okay in sim and time to start trading live. And it's like a totally different person emerged when he was trading real money. And I could hear him muttering under his breath. He said, well, first off, he made the mistake of asking me, Eric, should I take this signal? So he'd be looking here. And he said, Eric, should I take this signal? Wrong question. It's not my money. It's your money. It's your decision. If I said it's a high probability signal, but it's your decision. I'm not I'm not going to be blamed for a bad trade. It's bad enough when I lose my own money. I don't want to lose somebody else's money. Anyways, we get into the trade, and he's saying, "Oh, okay, everything's working out all right. Okay, we're on our way." And it's like, "Oh no, the market's moving against me." And he'd start saying stuff like, "Oh, you stupid idiot," and some things that I won't even repeat. It's like you can't trade that way. The emotion will kill you. You need to have a level head when you're trading. That's why this risk amount is so important. You need to have that at an amount that you are comfortable with. Now, yes, I don't want to lose $325. That's a lot of money by anybody's standards. I don't care if you're trading a $100,000 account. $300 is still a lot of money. You can go have a very nice dinner with your wife, or for you ladies, you can take your husband out. For $325, you can have a very nice dinner out. So I don't want to lose $325. However, this is an amount that I can trade with a clear head. It's not going to make me panic. If I lose it, okay, I lose it. I have my safety net. You know, if I lose 5% of my capital on the day, that's it. I pull the plug, done. So I have those things in the works so I avoid making stupid decisions. So when we were looking at this rule of three signal here, and I popped out early around break even somewhere around here, and of course the market continued lower without me. It was unfortunate, but I don't regret the decision. It was a decision I made, and it was a sound decision. The market was sideways. I was looking at this market. It was sideways. I figured it had just as high a probability of going up as going down. I'll take my trade to break even. If it works, it works. If it doesn't, well, it doesn't. At least I didn't lose money. See, your objective as a trader is not only to make money, but it's not to lose money. Here, I did the same thing, right? So we're short. The market is starting to look like it's maybe retesting the low and going to fail. I'll take the break-even stop out. If I'm wrong, I'm wrong. Shoot, won't be the first time. Certainly won't be the last. Just ask my wife. But you have to be able to trade with a clear head. You don't want to trade so much money that you can't think objectively about your trade. And there's going to be times where you just flat out don't know. You're going to look at the chart and you're going to say, what the heck is this? What am I going to do with this? If you don't know, leave it alone. The market will tip its hand sooner or later. Like right now, we've broken through the trading range. We're retesting. Things are still looking bearish, although we have this mild little buy going on. If the market's going to head lower, don't worry, you will have another chance to get in. And if it looks like the market's just screaming lower, well then just hit your buy or sell, or I guess your sell market button. But, you know, at the moment, this looks very, very sideways to me. You got all these yellow bars printing more or less the same latitude. I've mentioned this one before. I haven't mentioned it for a while. Traders refer to this as barbed wire, and you can see why. If I shoot a line through the yellow bars, you can see how balanced the market is, and it's very much like a string of barbed wire, isn't it? And if any of you have ever tried to climb a barbed wire fence in your youth, you know how much fun that could be. So if the market's sideways, the market's sideways. You should print off and frame the following. Your job description as a trader is to take what the market is giving. That's it. You cannot impose your will on the market. You cannot make the market do anything. Oh, Tony, you are a brave man. I have a feeling your wife is not in the room with you. Tony writes, for $50 you can have fast food, and with the other $2.50 you can buy her a new vacuum. Sorry, ladies. For those ladies in the room, Tony really didn't mean it. He's just trying to be funny. Now I know one of the ladies is going to come back with an equally funny remark, or shall I say snide remark. All right, we're stuck. We are getting a first micro macro cross. We should see a little bit of an uptick. I'm a little bit late on the signal. Problem is you got to risk this one way back here in order to get it to play out. Tony's sofa must be much more comfortable than mine. All right, here we go. Back into yellow bars. Coming back with another green bar sell. This is going to be a do or die time for the bears. And what I'm doing is I'm just setting my stop up here. Oh, actually, you know what? I may leave it up there. No, signal's since disappeared. I don't need to worry about it. What I was looking at doing was taking the earlier entry because, here, let's frame this up again. Because of these lows here. And if I delay my entry until the ATR flips over, I'm going to end up shorting right about here. And that puts me right into this trend line with a possible bounce. So I'd rather try to enter a little earlier. Okay, so that first micro macro cross hitting its profit target. Took a little heat on it, but there you go. See, that's what I mean about this system. It's so often it's smarter than I am. that's not setting the bar all that high, mind you, but you know, you see the signal print and you don't believe it. You don't trust your eyes, and yet there they go. Well, we'll see if we can't get another trade-off here. Crude actually producing a trend change signal here on the Falcon. After plotting seriously sideways all morning in this very bearish market, it looks like we're going to make a push to the upside, quite possibly. Now, crude does have room to move here. You can see we've got secondary support right here at 43.20, primary support at 43.43. That would be a decent objective, I think. But I'll take the profit when we have it. if we can get it. There we go. Hit the break even. Come on, crude, get up there. Don't tag me for break even again, you stinkers. You've done that to me twice today. Don't make me get the mouse. See, it's right here. Don't make me use it. Come on. Let's go. Let's go. Oh, killing me. There we go. Hooray. Hooray for us. I do suspect we will see 43, 40, 44, 45, somewhere in there. Maybe even the median line, but I'm quite happy getting that little intermediate swing. Thank you very much. Now the NQ looking stronger again. Well, we were a little pickier this morning, weren't we? But it paid off well. Wow, the NQ really pushing. The NQ, very strong, so I would say the sellers losing their grip on the market, or we're just going to end up congested again, back into this much larger sideways range. It's hard to tell at the moment. Tony asked, Eric, does the DTS system require a 1 or 2 bar pullback before printing the first micro-macro cross signal? No, I don't believe so, although it seems to occur a lot that way, doesn't it? Where the bars will reset. But no, here's one. Here's a first micro-macro cross lower without any pullback. But you're right, a lot of times it looks like the bar, well, no, this one, well, I suppose the signal printed 1 bar lower. And it seems like to the upside, you get a mini pullback, don't you? And to the downside, it just prints straight out. Interesting. Never noticed that. There is a price component involved in the DTS, but pullbacks are not one of them. Well, how close are we to the high of the morning? I think we're pretty close. Yeah, not bad. About 2.5 points. All right, well, just in the middle now. So we saw a rally up. I was watching crude oil there for a second, thinking we might get another opportunity. Crude oil did get to the primary support line after all. Tagged 43.50. And then put in a little bit of a bounce. I am starting to think trading range. I don't know. It's an odd day. You know, if we don't take out, well, odd day. It's it's been a good day, but right now we're kind of left scratching our heads, wondering, okay, we're back near the top end of where we started the day. This was this morning's open or opening high, and we've come down. We've rallied back up. Are we just going to flip-flop sideways? Well, I think if we see the market come down here, make another push higher. So we're going to see it come down, make another push higher. And if it either fails early or gets up here a little bit and, you know, just, I suspect it'll poke through and then reverse. I think we could see prices head back down into this trading range. Maybe not a full-blown reversal, but maybe something to tempt the trend line, maybe back here to 4,800 even. But it is Friday. It is either triple or quad witching today, so we may well see the market just drift sideways for the rest of the session. That's a very real possibility. We'll stick with them for a few more minutes, and then I think we'll button up the room. And we'll see where they go from here. No, they've pretty much dried up. Well, why don't we call it a day then? If anybody has any questions, please type quickly. Just type, I've got a question, and I'll make sure I wait. Otherwise, we'll close things up, and I hope you have an enjoyable weekend. I'm certainly looking forward to mine. All right, ladies and gents, we'll see you again on Monday morning. Bye for now.